Hey guys, this is Brian. I get a lot of DMs and I wanted to share the information with everybody so that in the future, if someone asks the same question, I can just refer them to this video. And that way I'm helping a lot more people instead of getting the same questions over and over again. And some of the questions that I've been getting in the past month have just been fighting for green, winning streaks, how do I get my orders filled, and how do I hold all day? Like, what are some of my habits? Am I sitting at the computer all day, or am I doing other things? Trading at certain times a day, and what I think about that, and then just volume and level two, like what am I actually looking for? So I threw together just a really basic Excel, and I'm gonna go ahead and just present this. I could probably go a lot more in depth, but just take it for what it is, just an experimental thing right now. And if you guys like it, maybe I can do some more. All right, so here's the question fighting for green. It says, thanks for response. Been fighting an overtrading demon. It's killing my account. I'm aware of the overtrading in the moment, but I don't have the discipline to shut everything down since I think I'll miss something. I've been down a tiny amount, think I can just take a scalp and be green on the day. The trade doesn't work, and I just dig myself in a deeper hole, and the pattern repeats itself until I look at the dollar amount I lost and then just walk away disappointing myself. I'm trying to find a way to keep myself distracted and prevent overtrading. Do you have any suggestions to fight this? Okay, so basically, I see this a lot with traders who don't really have a systematic approach to their trading, or not. You don't even need to be necessarily systematic, but they don't have a well-defined criteria, and then it's also kind of married with the risk-reward aspect, and then I'm going to go ahead and talk about the max loss. So all these things kind of work together in tandem to make sure that you're not fighting for green all the time. So basically, what I see a lot with a lot of traders I talk to is that most people try to go for really high win rate strategies with a low risk reward. And the problem with that is that it's very difficult to kind of filter out trades. And what I mean by that is if you identify setups basically all the time on any stock that you're looking at that has like a little micro pullback or puts in a double top, whatever it is for you, or something you're reading on level 2 and you're going to take profits in 30 seconds or a minute later, that does work for a lot of people. However, it's very stressful. And the main thing about that is you're basically never going to be able to identify when you shouldn't be trading, because you're going to look at a chart and you're going to see all types of triggers for what you consider maybe as a good trade. And for me personally, when I take trades, I like to have a standard for myself, which is my risk reward. So a lot of times I'll be able to think of the trade, how it would play out before I get in the trade. And a lot of times if I put it into my Excel, or if I just look at the numbers, like here's where I would enter, here's where I would risk, and then here's my price target. If I can't get 3-to-1, I won't enter the trade. And that actually helps me filter out a lot of BS. Unfortunately, like the statistics behind that and how that plays out, I didn't include in the spreadsheet, but I will include in the description a spreadsheet that Yakbro made, which is a win rate and R simulator, so that you can go ahead and plug in your stats there and see how you would go. A lot of times people find it really, really eye-opening when I show them that even though they have a high win rate, because their risk reward's not very good, that they're basically going to be break even or just barely green. Whereas if they just up it a notch, like even if you just go from 1-to-1 to 2-to-1, for example, you'll be taking a lot less trades, but they'll be way more impactful, and you're probably going to end up a lot more profitable in the end. But what I see a lot again is just over trading in the sense that you see opportunities everywhere. And so for me, I think it comes down to just experience, knowing that when I have taken trades that I consider like less risk reward, like a lot of times I just kind of bleed my profits away. And even if I do win, it's just not worth the try. Another thing I like to talk about is like systematic trading, which is you have an entry signal and you just follow it, because like when you backtested that signal, it will produce a high odds result most of the time. And the other thing is criteria. Like for me personally, again, I don't like to trade past certain time of day, and we have a slide on that, and I'll show you like one of my trader view statistic graphics. But basically, after a certain part of the day, I stop scanning for stocks. I stop, looking for more trades because I know, gathering experience and gathering more data and putting it to my trader view and just knowing myself, at certain times of day, I actually don't really perform very well, or the trades I take have a higher chance of me actually losing the trade because I'm fighting it during the choppiness during the afternoon, or the lull lunch hours. I am basically in at a worse price than I would be if I was trading during the more volatile times, and that actually helps me just avoid lots of trades. So we'll get into that, but statistics also back it as well. Overall, though, if you don't really know, how to start, it's really just trading, getting experience, seeing what's kind of trending, and then putting that into your trader view, looking at the stats and seeing like where you really perform best, and just trying to like eliminate the setups that don't really work in that respect, as well as identifying what setups you do perform well on and just sticking to that. Like for me, I stuck to one setup for 2 years, and every time that I would kind of dabble outside of that, I would usually learn some lessons. Like now I've gotten to the point where I can actually trade those other systems, but they're still not as strong. And whenever I feel myself drawing down or taking losses, I always pull back and just eliminate those trades and just trade what I know. That usually gets me back into a position where I have enough mental capital to keep going. Finally, max loss. In regards to trading, a lot of times people will just keep fighting a stock if they're wrong, and that's generally what causes the emotional errors like revenge trading, averaging down, or just losing way too much money than they were anticipating risking on the trade. And personally, I have a max loss not only on my account, so for the entire day, but also on each position. So that will guarantee that I can't keep losing, and that way I'll be able to just walk away, because a lot of times I still will hit the button like, hey, I want to short this, but it will reject me from my broker side, and that really helps a lot, because then I can take a breather and be like, what am I doing? And that will help me realize and just have the thought process that like maybe I do deserve to lose here, even if the setup does present itself that I was looking for in the next couple minutes. Obviously something was wrong to the point where I couldn't get there, and so the best thing I can do is just take the market tuition, review it, have a plan for the next time, what I'm going to do differently, what can I improve, and then if I don't get results that way, maybe I would even cut that setup out. But generally that does help me, and usually those stocks, I call them like my cursed stocks, like the ones that really break my system down and force me out of my positions before I can actually take the setups that end up working really beautifully. Those are the setups that help me grow the most. But I feel that if you constantly are fighting the stock and eventually you win, you're going to build so many bad habits. The best way is to start accepting those losses and walking away, because a lot of times the quality of setups emotionally, they start dying down over time. One more thing about how max loss and risk reward work together is that, like, let's say that you generally have 3-to-1 risk reward, then I would usually risk no more than 3R on that trade. Usually I would prefer to even do 2R, because at the point where you go past 3R, you're likely not going to be profitable even if you win. And so I don't want to dig myself in a hole. And if I have 2 losses but I win once, generally I will recover and be profitable. And the only reason why I keep it at 2 instead of 3 is because on the short side you have fees, you have commissions, locates, and that will actually push you over. So a lot of times you're actually not even fighting for green, and you can kind of make it a lot worse. And when it comes down to all the tickers where I took like a very large loss in the past, where I even blew my account up, the criteria was good, the system was performing, everything I was doing was normal, but the stock can just keep on going. Like, some stocks are anomalies. Those are the stocks where you need the max loss, because there's almost nothing that you can do in those situations where every adverse condition is happening and you are not prepared to walk away. A lot of times people will keep fighting setups, and that is really, really terrible for you. It's a very nuanced and long topic. This could be its own video in itself, but hopefully just like a small overview helps you out a little bit. So let's go on to green streaks. So this is kind of similar, but the question here is, hi Brian, I've been winning on a winning streak for 20 days in a row. Thank you for your tweet, inspired me to do better. Just want to ask, what are you doing to remain humble and maintain that winning streak? So for me, winning streaks don't really matter. And I think the psychological component of a green streak is actually going to hurt you more in the end, because now you have this kind of expectation for yourself, and a lot of times that is it's a false validation of your performance. If you perform well, you will profit. There's nothing about green streaks that means that you're optimal trader. It just means that you went out of your way to win. And maybe you were winning for 20 days in a row. Maybe that's just how you perform. A lot of times, I find traders that win a lot tend to basically give it up in 1 or 2 days, because whenever they're winning, it's very small, and whenever they're losing, it's about, as you know, it's a very normalized losing range. So it's very easy for the losses to overtake their wins in the end, and then a lot of times they have a harder time losing because they're so used to winning, and they don't want to lose this expectation they have for themselves so badly that they'll kind of search for like, hey, I lost on all the small caps today. Let me go trade like SPY or VIX or something. Let me trade something outside of my comfort zone and just make it to green, like just to satisfy themselves. And I think that is a habit that's going to kill you. And I've actually seen a lot of traders who've come to me who've been in that situation. They lose a lot of money, if not blow up. The way I like to think about trading is similar to casino. So like in risk reward sense, a casino over, a year of people coming in and playing for their odds of being just like 51% or 55% on any type of gambling game, they know that mathematically they're going to come out ahead. So if you view trading as a risk reward game or just a game of law of large numbers, then it takes the meaning out of every singular trade that you're taking, which can actually be very good for your mentality, because now you realize like, oh, I lost today. Like, yeah, I got bested. Maybe it was because of a mistake. Sometimes traders make mistakes and they feel like they have to redeem themselves. But maybe, just like I said in the previous slide, if you're making mistakes to get to that point, the better thing moving forward is to address why those mistakes happen and improve that in the future, instead of trying to fight the stock. Because a lot of times if you fight, you're going to get like chasing entries, you're going to ignore risk. Maybe you don't even have a profit target in mind. A lot of times the stocks without profit targets are the ones where it's just so hazy and realistically not worth taking, in my opinion. So again, with the law of large numbers, what I would do is, again, go and look at Yak Bro's equity sim calculator and just plot it out for yourself and just say like, hey, if I trade perfectly for 200 trades, and it'll show you there on a chart at 2-to-1 risk reward with a 60% win rate, what is my equity curve going to look like? And then you have to also adjust your expectation based on the fact that you're human. So you're going to make mistakes, number one. You're going to have fees. You're going to have days where you just are not in the zone or something's wrong, So you just have to anticipate that you're not going to trade as perfectly as that equity sim. And what I like to do is basically set my expectations around 70%, even sometimes 50% of what it's showing me, because I know that that's just the way it is, and accept that you're a human being. But basically, if you can plot a chart that has a really good upwards trend and has a consistent growth, then you know that if you stick to this risk reward and you trade in the way that at minimum your standard is that you get 2-to-1, then you will, be profitable. And it's really nice to see that. It's really nice to acknowledge that in yourself. And I wish I put it in this Excel, but maybe I will explain it in another video. Okay. Another thing is experience and system. So in terms of experience, basically you just want to gather as many samples as you can, and then, if you're a new trader, trading all different types of things is fine, and then just check your stats and reel it in, like, where am I performing, where am I not performing, cut that out. And then as far as your system goes, you want to tweak it so that your system is in line with the risk reward, and that you're not taking trades that actually do not meet your standard. And that will also help with the overtrading aspect. You have to realize that losing is just part of the game, and it's a business expense. So if you feel like you have to win at all costs, then you might want to consider a system or you might want to consider the data and just tell yourself, like, hey, I can lose and be profitable, and I will make mistakes. And would I rather be perfect and lose it all in one or two trades, or would I rather, lose more but make a lot of my winners and therefore have a large margin for error and generally be more at peace with myself? That is completely up to you, and you'll kind of know that over time. But I would implore anyone to just try out a risk reward and see how that works for you, because a lot of people I talk to, it changes their trading in a really big way. With green streaks, there are negative habits. I talked a little bit about how you search for non-need setups. You have this sense of validation. Last month, I was heading towards 100 R total on the month, and I was just thinking to myself, wow, would it be amazing if I got 100 R? And when I said that to myself, I kind of caught this similar idea to the green streak, where it's like I'm setting an expectation where it's something I want, but in order to get that, I might be forcing it out of the market. And in that sense, I had to tell myself, like, hey, there's no pressure, just trade well. And from trading well, I actually shattered that 100R and went to like 120 or 140, I think. I'm not sure, I forgot at this point. But basically, if you catch yourself thinking like you need to win, or you need to be green, you would love it if this X scenario happened, just try to catch yourself and just tell yourself, hey, just trade well. Like, it is psychological as well. And with a lot of traders, I noticed that once they have really long green streaks, again, like, it's very hard for them to accept losses, or they get very confident and then end up taking large losses. And it happens to everyone. So in my first and second year of trading, whenever I would have a really large green streak, or whenever I would start winning and my chart would just go up and up and up, and I was risking more money on trades, I always used to take a pretty sharp pullback, not super sharp, but I would basically like trade some other strategy, or I would size in too big in one thing and not accept it. And that led me to take larger losses and draw down. So at that point, I kind of just expect, whenever I'm doing well, that the next drawdown is around the corner. And that way it keeps me grounded. And then pairing that with the law of large numbers and just knowing my stats, like, where will I be if I follow my plan? Then I kind of see the whole curve normalizing over time if I just perform. But with a lot of people, when you win all the time, you're actually not really growing, in the sense that, like, we usually, as traders, as people, we tend to grow when we make mistakes or when we lose. That's when we have the most self-reflection, when we get really introspective, when we work hard. And a lot of the days where I took large losses, like what I talked about, those cursed stocks, those are the days where I essentially spent all night, sometimes weeks, all my spare hours tuning little things, making systems more efficient, and eventually just making a better strategy for myself. And I think that when you fight so hard to preserve your ego, you're setting yourself up for a large failure, because you're not taking your market tuition in stride. And it's not that as a trader that you're gonna develop the skill and that you're just good forever. It's a ever growing pool of experience that gonna you're gonna be changing, you're gonna be evolving, you're gonna be learning, and you're gonna be developing for the rest of your career. So avoiding losses is really just you trying to feel good in the short term and not really considering where you'll be 10, 20 years down the line. And I think I already talked about stats, so we're just going to move on. Fills and all day holds. Says, hey Brian, great content you've been posting lately. I appreciate all of it. How's it done? I've decided to take a step back and rethink my risk reward and really think about the compounding effect. Anyways, I have a couple of questions about when you are in a trade. So if you have the stop or target mentality for your trades, are you putting out limits ahead of time and just waiting to get filled? Also, what are you doing throughout the day if it's an all day hold and you have full risk on? Are you in front of the screens managing the trade the entire time? Or if not, what do you do to make sure you stick with your plan? So this is basically two questions. And the simple answer is I keep my orders out. So a lot of times I'll know generally where my price target is. It's not always perfect, but I'll put my orders out just so that in case it would hit while I'm gone, I'm more likely to get filled into those washes. And you really, really want at some point, like when you have more liquidity, you really want to get filled into those washes because those large volume sell-offs or pushes are where it's very easy to get filled, adding liquidity. But that's not to say that I always do get a fill where I'm sitting out. Sometimes I'll see the stock around my price target, and a lot of times what I do is I'll just think about the trade in the sense of how much risk per share was I putting on. So if let's say that I put on like a 40-cent risk and I'm trying to get 3 to 1, then a lot of times when it's like within 5 or 6 cents of my price target, I'm like, even if it moved another 10 cents, like it's not going to make that big of a difference to my average R. And I can see it kind of stalling out here. Technically, maybe it might be double bottoming, maybe there's some sort of support there, and I'll end up just taking those trades by either slamming out if I see liquidity at a decent price, or I'll just wait for it to hit me. A lot of times I'll just slam out though. What am I doing throughout the day? So if a stock is very volatile, a lot of times I'll stay. So this goes for low floats, which I don't really trade that much. Stocks that are really strong and holding near their highs, or the ones that actually show large volume, because a lot of times you're not guaranteed that your stop is going to be at the best price. A lot of times those break very easily in those conditions. But if the stock is working, like let's say I put my entry on and the stock breaks down and it just continues to trend in my favor, a lot of times I'll just set alerts along the way. Sometimes I set like 2 or 3 because I absolutely don't want to miss it, and sometimes I'm actually asleep. So I'll go take a nap for 30 minutes, an hour, hour and a half with my chart up on my phone, and every so often I'll just glance at it. I set really tight alarms, so I won't be sleeping for an hour and a half. I'll actually be waking up like every 30 minutes or every 40 minutes, so that I try to avoid the REM sleep aspect of it so that I don't wake up drowsy. I'm just trying to get little power naps because I wake up really early in the morning on the West Coast and I don't get that much sleep. So for me, I'm just trying to squeeze in sleep. And with a stopper target mentality, as long as you have a good risk level, not too tight of risk, and you're putting on appropriate risk for the stock that you're trading. For example, you wouldn't put 5 cents risk on Tesla stock, but it might make more sense for a stock that is at $1 trading, for example. As long as you have it at a nice, like what I guess you would consider as maybe like an average true range, to simplify it. As long as you have that, you can kind of rest easy that you're not going to just get slipped out or like liquidity hunted during the day. And then I do not trail the stock. It's literally like, if it hits my stop, I'm out. If it hits my price target, I'm out, but I'm not going to take anything in between. Now that's changed more so as I've developed as a trader in more nuanced ways, but that is a different topic. But the short version of that is that as you develop, it's good to learn when to break the rules. Sometimes I can identify when something is not going in my favor, when I know for sure that I'm going to get stopped out, and I can mitigate the loss in that way, which is very helpful. Or if it's like a good enough price target. But in general, I really, really recommend that people stick to their plan in its entirety, build that muscle. It's better to operate on the extreme level than to just put 50% effort in and ask why it doesn't work in the end. Like when I was playing in a competitive team, a lot of times we're a very defensive team. So in order to break out and be more aggressive, just add that to our game, we decided that it's better to just go over the top. So as we played the game, we were very, very, very aggressive, and we're doing things that we don't do naturally. And then we figured out in what ways did it work for us, what ways did it not work for us, and then just tune it eventually. But you have to get a bit of a sample size there. So I do recommend, just if you're new, sticking it out, because there's a relationship with risk to reward where a lot of times traders always lose the same amount, but they never make a multiple of what they're risking. So if you don't do that consistently, the risk reward is going to be all over the place, and you just won't have the ability to follow through with your plans. And what do I do to make sure I stick with my plan? It's just standards. So for me, I know based on the stats, equity sim, that I will be profitable if I hit a certain threshold. So for me, it's kind of unthinkable to take a trade where I don't take it where I intend to take it, where I don't take my price target. And because of that, yeah, a lot of times I will lose, or a lot of times I'll break even on setups that could have been good, or I'll get back a lot of profits. But in my mind, it's not worth taking the profit if it doesn't contribute to my long-term equity goals. So I look at it as a long-term game, and the game doesn't really reward you if you don't stick to your plan. So you just have to accept that. For me, I like to say that if I don't take it at this point, then the trade is pathetic. I don't feel good about it at the end of the day. A review of why it didn't work out. Maybe I was too aggressive with my price target, so then I'll pull it back, be more conservative. Maybe I wasn't aggressive enough, and then that led to me kind of taking stretch targets. So a lot of times I'll take my price target and then I'll hold half and just try to take it as far as I can. That really helps me maximize reward. And the more reward that you maximize out of each trade, the more leniency you get moving forward. So if you only intend to make 3R and you make 4R, that's like giving you a free try in the future where you risk 1R, or even 2 tries if you only risk half an R in a trade. Again, there's a lot of information. Maybe I should have just made one video for each thing in more depth, but it is what it is right now, okay? All right, time of day. So what is your opinion on time of day trade? I've been trying all day because I have FOMO about missing breakouts at noon, but the morning is the most consistent. However, I make mistakes in the morning due to how much time I have on the screen and fatigue from working 85 hours a week at my job. So obviously working 85 hours a week at his job and fatigue doesn't make you the best trader. And maybe it's not feasible, but there are different setups that work for different times, and I'll list a couple of them. But the main thing that you want to do is just test, get experience, plug into TraderView, get stats like this. This is just an example. So I'm on the West Coast, so 6:30 market open. Generally doing better around those most volatile times of the day. What is volume? And the reason why you don't see anything past a certain point is because I literally do not trade after a certain time of day, because I know that the quality of my setups gets worse, the risk reward gets worse. That comes from experience, that comes from testing. But the more samples you have to throw into this trader view, which is free by the way, for 100 uploaded trades per month, you will be able to get metrics like this. And a lot of times people aren't able to really consider their stats. A lot of times they're not able to visualize, or they're thinking very emotionally about what's happening. But you can't really argue with the stats when you see them over a large sample size. And it should be pretty clear what you need to do after that. So for strategies, there are a lot of times with long setups or with setups that involve high volatility, you want to be trading in the first couple hours of the day, because that is the most volume that you're going to see, generally speaking. And for that, you don't have to really sit there all day like I do. You could set more conservative price targets, or you could be in the trade for the first hour. I know that in the future, when I want to take on less stress, when I have maybe a family or something like that, where I don't want to be glued to the screen all day, I can take less profits, albeit I'll take consistent profits that are good risk reward. I'll just, I'll take the easy move, and that's all I need to do. You could certainly do that. For longs, a lot of times in pre-market, things are gapping up. You want to set, different criteria for why you would enter a stock. Like maybe it's a low float, maybe has really positive news, maybe there's a ton of volume, maybe it's breaking out, whatever it is. And you want to save charts that are very, very similar, or take trades that are very similar in the criteria. And then over time, you can see what entries are performing, what entries are not performing. I guess I didn't really have too much for this one, so I'll just move on. Hopefully that's satisfactory. The main thing is just trader view. Okay, volume level 2. So, very simple question. What are you looking for on volume level 2? Personally, I'm not huge on it, but over the years I have picked up things. And I think I had someone ask me the other day, should I even bother with level 2? And to him I say yes, because even if you don't focus on it entirely, as you trade, you'll just start to develop a feel for it. You'll notice things. But hopefully I can help with some of the things I do. So first of all, I like to look at pre-market volume on my scans, because those are usually the trades that interest me, where I can do my due diligence, the ones with the news, some sort of catalyst. I like to see where the volume is relative to how it's traded in the past, how it's traded against the other gappers in the morning. Like sometimes the stocks with the highest volume end up being the ones with the most attention during the day, and generally, I don't know, you could say more crowded or just more subject to manipulation. And for that reason, if I notice things like that, it might help inform a decision, like maybe I shouldn't be aggressive shorting, or maybe I should wait for more confirmed resistances, things like that. That really does help. And a lot of times you can kind of extrapolate just based on the volume. Like sometimes you'll see a stock trading 5, 10, 15 million volume, and that's kind of abnormal in pre-market. That means during the day it's going to trade a ton of volume. And generally, even if you look at TraderView, they'll even tell you like if you perform on stocks with volume or not. Like for me, it says that under 25 million volume on the day is really good for me, and then after that it's really hard for short. So that's one thing you can keep in mind. Sometimes I look at the opening candles. Oh, actually, back on pre-market volume, also there's situations where there's like no volume at all. It's super dry, and in those situations, the setup's not even worth it, because even if you get in, it's really hard to get out, and you're going to be a large percentage of that volume actually traded. The spreads are going to be really wide. And it's just fairly uninteresting setups. Okay, for opening candles, sometimes I'll look and I'll just kind of notice in the first minute, 5 minutes, how much volume is actually being traded. Sometimes you'll trade a stock and then when it opens, for some reason it's only trading 100K or 200K volume. When you're thinking at the open, sometimes they trade millions. Something about that screams to me that there's not that much demand. Whereas other times there's millions of trades going off. And that helps me identify like there's a lot of volatility happening right now. I need to be careful. And that also does set the stage for the rest of the day, like how much, obviously the most of the volume is going to be done in the open and then it's just going to kind of taper off. And based on that, you can kind of extrapolate whether or not the setup might have more volume, which may or may not be favorable for your strategy. Okay, I also look at volume exhaustion, which is basically when a stock has really abnormal volume. So sometimes, let's say to the upside, the stock will trade 2 times the previous volume high. And a lot of times in those situations, that speed up is a really good place to start in short, because a lot of times that's where people are chasing or where shorts are covering really quickly, like market stops. And usually in those situations, it's more likely that there's a short-term reversal. And so that's also a high odds kind of setup. Doesn't always work, of course, but it's pretty good. And you also want to look for those candles on when you're getting filled. So it's kind of going back to the other slides. When you put out orders, you definitely want to, it's more favorable to get filled into those candles where you see like a large volume plus price, because a lot of times, again, like even when I'm covering, so I'm buying, even when there's like a huge candle coming down, huge volume, a lot of times that'll be kind of a short-term bottom, and it's good to get out those prices so that you don't feel emotional as it perks back up, which stocks tend to do if it's having healthy price action. I look at slowdown at key levels. So basically, if there's a technical level in the chart that I'm watching, then I'll look to see how it's acting at that point. So let's say I'm going short and I see that it's coming up to a resistance level, and even if it breaks over for a bit, I'm just kind of looking to see if it can maintain that momentum or if it simply wanted to test that level. And sometimes when I notice that it's slowing down significantly, that's a good point for me to start throwing on some shares. Of course, if I'm wrong, I'll just cut it. But that's kind of what I look for in those situations. And it does help get pretty good entries because you're basically reading the demand at very critical point on the chart. Okay, and on to level 2, I'm looking for big bids and offers. Context matters. Sometimes they're fake. So a lot of times when stocks are on the front side, there's going to be someone soaking or bid propping. Usually you'll see them trying to bully the price up by showing size. And it can also happen on the other side where there are big offers trying to push the price down intentionally. And you have to think, like, why would someone who wants to fill a huge order reveal their position if not to intimidate? And a lot of times, sometimes traders show size but don't technically want to get filled. And so when they start getting filled, sometimes it pulls, and that creates kind of like a waterfall in either direction. And so I do like to see how those bids and offers influence the price. And a lot of times I'm not really intimidated by it. If I see a big bid, I want to see it getting hit and then eventually pulled. And that helps me realize, like, that was, definitely not someone who wants to get filled. And then same thing goes for offers. Sometimes there are big offers, and if people hit it, it starts speeding up. It breaks through real quick. And sometimes it actually just soaks the price, or there's a huge offer and it's kind of unbreakable, and that causes people to give up, and then it just reverses off that point. I mean, it's very, very situational. Seldom I see that those big orders are really not meant to push prices in a certain direction or bully. Usually it is done in that way for me, but that this is all small caps. And then lastly is just liquidity. I like to look if the level 2 is confirming my belief. So if I'm trading a low flow stock, and let's say that on low floats, sometimes you don't have the most accurate information. Sometimes they did offerings in between, or sometimes the financial websites don't update right away. A lot of times I'll look at the spreads. I'll look how thick the bid and the ask is in general, and that can help inform me of whether or not it might be thicker or thinner than it says. So it works in the reverse as well. Sometimes you see a low flow with super thick bid and ask. Sometimes you see something that's supposed to have really high float that has no bids and offers, and the spreads are wide and thus very dangerous. So that's something to look for. And then the other aspect is just liquidity in general for your purposes. So when I'm in a trade, again, this goes back to pre-market volume. If I see that there's not enough volume throughout the day, or that I don't think there's going to be volume, I just don't even bother with the chart, because I know that I want to be a small fish. I want to be able to get out of my position to manage risk. And if I see on the level 2 that based on my trading plan, however many shares I do want to take, if I can't get out of that position, then I'm very hesitant to even put it on to begin with. And sometimes it's not going to be that clear, but if you watch it enough, you'll be able to see sometimes, there's just not possible to get out. And that way you're going to cause slippage, and you're going to cause the price to move up. And that really sucks. All right, so in conclusion, by this point, we're 40 minutes in. I think I went a little bit too much in detail for what it was, and maybe rambled a little bit as well, but first time. Follow me on Brian Lee Trades on Twitter if you haven't already, and then I'll put the links in the description. Hopefully this was helpful for some of you guys. I know it's going to give me more questions to answer, but if I don't, I'm going to try to put them in video format, and maybe I can put timestamps to link like where certain questions are at, so that you don't have to spend the whole 40 minutes. Anyway, thanks for watching. I hope that it was helpful. Did it in one take. Just putting it out there. We'll see what happens, all right? All right, see ya.